Hey, Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sea of green on the crypto bubbles over here. We do see, of course, that the market in general is going sideways. That is largely because we are having a bit of hot reading on the CPI and some other indicators regarding inflation, which does suggest that Jerome Powell may have the opportunity to raise rates again in the future, and that could just suppress markets longer than expected. Of course, guys, I have been a little bit away from the computer. That's because I've been moving my house. The current setup that I have right now is not ideal, but I am extremely close to the beach and in a very lovely setting. However, I am missing part of my rig, and things just aren't completely set up. I'm also taking a pretty big risk in this move, and so I am looking for local work opportunities to support myself in this lifestyle. Guys, let's just jump straight to the charts because, as I did say, we did get a little bit of a hot reading on the CPI that we did get the other day, and we are also going to get a PCE reading on February 24th. So that is something that we want to look out for. If we do look at what was hot, we can see that the University of Michigan 1-year inflation expectations read as a 4.2%, whereas the previous reading was 3.9%. So although some other things look relatively neutral, we can see that that is a hotter reading than what perhaps the Federal Reserve would have liked to see. And if we do just zoom out to the CPI reading, of course, the expectation for core was 0.3%, but we got 0.4%, which is hotter than expected and also hotter than the last reading. We also see that the CPI, just in general, the last reading was a negative inflation, but this time we got a 0.5% positive reading, and the expected was a 0.4%. So of course these are working against us. So that's kind of your macro perspective there. But again, let's just jump straight to the charts. Yesterday, I was posting in the group, and we could see certain levels that we needed to hold. Essentially, we had our hold momentum level down here where our current daily volatility pivot is. And as you can see, we did hold that that momentum level, and we did spring off of it. But what concerns me is that we are back testing the breakdown that we had over here about a week ago, and we didn't really rise above that. Now, what's giving me positive indications is that we are above the additive momentum level, and we also are above the daily volatility pivot. And so, as the daily volatility pivot has cooled down, it used to be quite overhead, in fact. We have had this pullback, just kind of a consolidation pullback so far, and now the volatility pivot is under us. That's a good thing because it suggests that arbitrary, just random volatility in the market would have a bias to the upside as opposed to a statistical bias to the downside, which it's been having. And that's probably why we got this pop up here. However, just from a structural perspective, you can see that this was more or less a back test of the breakdown off of this diagonal. We didn't really reclaim this candle fully. We didn't take it out, and bulls won't be back into control until 23,000, essentially $300. Again, we are above that additive momentum level, and we are above the volatility pivot. So I cannot be bearish. Bears don't gain control until around 20,600. And what I was concerned about and posting in the group the other day is that what we don't want to see happen is us essentially put in some type of head and shoulders, something like this. That would have been terrible. That would have given the bears the full control that they would have needed to basically tank this market down to those kind of like $18,000 levels. Now, we have successfully avoided that for the time being, And again, as long as we're above this volatility pivot, as long as we're holding our current momentum level, as long as we're actually having additive momentum to the upside, then and we're above general daily continuation levels also. So your MACD should be leaning positive as well. Then we do have a shot at breaking this diagonal, breaking back up into this structure that we had here. And should we be able to accomplish that, then maybe we can continue our way to the upside after having just kind of fooled the market, taken out some liquidity here, maybe just adjusted for some of those hot CPI kind of inflation readings that maybe just puts the fear of God in the market, right? And perhaps we can continue on our way. But as long as bulls aren't in control and bears aren't in control on the daily, then we do have to zoom out to the higher time frames. And as you can see on the higher time frames, of course, at least the medium time frames, bulls are still in control. We haven't broken any structure here. This still looks very lovely for exploring, the upside over here. We're not really breaking down. We are on a lower high watch, which does mean that this could very easily turn into a lower high. But it does look like that we're actually pumping a little bit as I speak. So bulls are trying to take out this level that I was talking about. Just showing you some proof is in the pudding there, should we be able to take out this line. But bears are also trying to defend this line to the downside as well. They want this to be a lower high, high, lower high, right? And then what would you expect? A lower low would follow after that. But in order for bulls really to gain control, we do have to get back into this formation that we did break down from. Guys, I'm extremely busy in my personal life these days, so I am going to have to leave it there. If you would like just a little bit of additional analysis, you're welcome to join us in the group. Of course, the Discord does have a link in the description of this video. And I just don't have time for too much fanciness, so those are going to be your key levels for the day. I think we can just briefly take a look at what our volatility looks like on the day here. And yeah, it does look like that we had a push to the downside, which then may be flipping around. So we are at kind of a volatility pivot right now on the daily. And so there's not much I can say until we get a little bit of a more decisive look off of this. But we do have this kind of mid area. Just volatility kind of a flip going on here. Not sure if this is going to take us back to the upside where this was maybe pushing us to the upside, and then this just had a bit of a pullback and maybe we're going to go for the upside again, or if this is going to just continue, to move up. So we will take a look at that a bit later. Let's see, is there anything else that we can look at? Yeah, we do see a little bit of a positive curvature on this jewel. Now, we have been looking at the jewel and we did flash this kind of God signal to the downside, which did suggest that pullbacks were going to come back. I've been following these type of patterns off of the jewel, which is just multiple different momentum oscillators just put together. Normally when we break down under these type of lines, we're going to be restrained by this mid area here, and we're probably not going to just immediately get back into a bullish zone on the jewel. So, just as an additional momentum, look there, it's not looking that great. I think we can throw on our EMAs just to see if anything interesting is happening here. And well, at least on the daily, it still looks pretty good. We got support off of that 200 daily EMA, which is quite lovely to see. Look at this. It was previously resistance, and we've now flipped it into support. So that's actually a very good look, in my opinion. We did put in a 4 EMA and a 9 kind of combo 20 EMA kind of squeeze here, which is what did give us that EMA squeeze to the upside. Don't fade the EMAs, guys. This is a very powerful tool. You don't need to do all the fancy stuff that I'm looking at. All you can just use EMAs and your MACD and your RSI, and those three tools alone will allow you to trade if you just learn them, the ins and outs of them. And so we are bullishly postured here on the daily. If we take a look at the weekly, you can see we are still bullishly postured, just kind of hanging out in this area. I don't see anything wrong. We could even potentially try to take out that 25K area again, should we get back into the bullish control there on the daily. Let's go to the 4 hour just to see what things are looking like on the EMAs. And they are looking pretty good. So again, nothing to complain about. We could have some more pullbacks, but so far everything is just very sideways crabbing, very neutral. Again, the market just grabbing this liquidity down here. There was a huge kind of liquidity push, just kind of retesting that. We did have those that daily 200 EMA. Maybe the market's just wanting to retest that kind of EMA structure there. And so everything's good, basically. I can't be bearish. I know the market wants to freak out. I know all of these influencers and all the big accounts, they're just having these crazy debates. But if we just go by what's on the chart, look, this is the level that we need to beat, right? This kind of 22,000, let's just call it 23,000 level up here. And, if we can get that, then maybe we can push back to the upside. Failing that, we have a lower high, and maybe we're going to explore, this lower area again. But I can't really give you a projection to the downside because things just aren't that bearish, okay? Guys, that's going to be it for me today. That was your alpha for the day. Stay safe and happy trading. See if I can figure out how to turn this thing off with my limited setup.